He has now committed to serving as Tesla's CEO for the ensuing 10 years. Many people had been speculating that he might step down within the next 2 or 3 years. He had stated that he might leave the company, at least as CEO, once the Model S, or Model 3, as it were, was completed and operational. However, a radical new compensation plan has just been announced by Tesla. It might be the most drastic compensation scheme ever. The performance of the business will have a direct impact on compensation. No pay of any type will be guaranteed to the executive. He receives no equity, cash bonus, or salary. Only if he meets these, dare I say it, crazy hurdle rates will he receive equity that vests over time. The corporation is currently valued at $59 billion. They operate in increments of $50 billion. There will be two indicators at each stage if he brings the company to $100 billion. You're talking about market capitalization, not revenue or production. He must first raise the company's valuation to $100 billion and achieve these revenue, adjusted EBITDA, and operational targets. He receives nothing if he doesn't receive either of them. That's a somewhat peculiar method of dividing it up by market capitalization. He still needs to reach the operational numbers, even if he reaches $150 billion. He has no influence over the market's potential for irrationality. He receives 1% of the business at every $50 billion milestone. He would receive roughly $55 billion in remuneration if, by some miracle, he were to bring the firm up to $650 billion, which is exactly what the plan requires, if you believe this. If not, he receives nothing at all. What happens if he raises it to $650 billion and it drops to $500 billion right away? He must hold the shares for 5 years after they vest. He still receives it at every milestone, correct? The strangest thing I've ever seen, even if market capitalization changes. Even if you were to raise the company's market capitalization to $100 billion, you would still need to hit the operational figures, which makes gaining difficult. You must receive both sides of the 1-2 punch. After that, you have 5 years to hold the shares. Have you spent the last few days working nonstop? You are not alone. I suppose you already know that. But what if we told you that the man behind Tesla and the brains behind Mars expeditions is putting forth endless effort for something much bigger than money? This film delves deeply into the mystery surrounding Elon's profits and reveals the startling details of his radical new pay structure that has the potential to completely alter the game. We'll discover the truth about Elon's financial decisions, consider the effects of a possible pay increase, and delve into the world of the much-anticipated Roadster. But take caution, the stakes are bigger than ever and the road ahead is full of curves. So, fellow Tesla fans, buckle up as we set out on an exciting adventure into the unknown. There is mystery, tension, and excitement around Elon Musk's remuneration, the Roadster's comeback, and Tesla's future. So, before we continue, please show your support by liking this video and becoming a Tesla Stock News subscriber. Let's get started. Elon Musk's compensation, or rather, the lack of it, has generated a lot of discussion. The man behind Tesla, Elon Musk, does not currently get a salary. Depending on whether you take into account just his stock or his options holdings, his wealth is directly related to his Tesla holdings, ranging from 13% to 20%. Elon Musk prospers when Tesla does. He has reached the highest level of remuneration, though, so he no longer has any goals to meet. According to an article from February 20, 2023, this has been the case for nearly a year. Since 2019, when California's minimum wage law required him to receive a meager $23,750, Elon has not taken a cash compensation. In addition, he had already realized 9 of the 10 possible choices blocks when the 2012 options he was given expired last year. Musk was revealed to have earned the final block of options awarded under a more generous 2018 compensation package just last month. Therefore, Elon has not benefited monetarily from Tesla's performance during the past year. It's crucial to remember that Elon Musk owns an incredible 412 million Tesla shares, with options to buy an additional 34 million at an incredibly low price of $23.34 each. It's interesting to note that this essay was written at a time when Tesla's stock was trading at about $128 per share, which is not too far from its current valuation. Interestingly, Wedbush Securities Dan Ives, who is often mentioned on this channel, said, "I would expect a large investors." He has now committed to serving as Tesla's CEO for the ensuing 10 years. Many people had been speculating that he might step down within the next 2 or 3 years. He had stated that he might leave the company, at least as CEO, once the Model S or Model 3, as it were, was completed and operational. However, a radical new compensation plan has just been announced by Tesla. It might be the most drastic compensation scheme ever. The performance of the business will have a direct impact on compensation. No pay of any type will be guaranteed. Elon Musk is the driving force behind Tesla, not just one of its employees. It is said that Musk would do better than any other Tesla CEO because there is currently no incentive compensation plan in place. It is suggested that he be given a big, bold objective, like producing 10,000 bots and bringing Tesla's market capitalization up to par with Saudi Aramco, along with a pledge to use the money raised to fund enormous human welfare programs. This isn't about building opulent mansions or boats. It's about advancing AI and automation for the better and increasing our space footprint by launching more starships. It's about Elon Musk showcasing his abilities with additional funding available to him. What would Elon do with more money, and what has he alluded to, is the question. Elon Musk has stated unequivocally that Tesla would still prosper even if he were to leave the firm today. It is unlikely to have a substantial impact on the stock's performance whether he or someone else is in charge. It appears that he is not now motivated by monetary rewards for making wise choices or advancing the business. It's more important to keep a pleasant and elegant demeanor. This circumstance may help to explain why Elon Musk has been more negative in recent earnings calls. Unlike executives like Tim Cook at Apple, who have a talent at comforting investors even in trying circumstances, he lacks the drive to sugarcoat the company's performance. Apple maintains investor trust, and its stock stays close to all-time highs despite seeing a dip in revenue for successive quarters. Elon Musk, on the other hand, has no such motivations and expresses his opinions without hesitation. On the other hand, Elon might benefit from a well-designed incentive plan. It might motivate him to move more quickly on projects like the Roadster, the Cybertruck, and other endeavors, which could result in more rapid advancement. This viewpoint is not unique. Talks concerning a new Elon pay package have been going around and have become more popular in recent days. Investors in Tesla shares may become excited when such a bundle becomes a reality. Elon is clearly motivated and guided by the knowledge that he stands to gain significantly if Tesla becomes the most valuable company in the world or reaches a $2 trillion or $3 trillion market cap. Notably, the Roadster, which was first expected to be released in 2020, is now inspiring hope. The new Roadster may arrive in early Q2, according to reports that senior technicians have been training for it. The possibility of the Roadster going on sale might be a huge benefit for Tesla and its investors, even though there isn't any hard proof to support this. After all, when the Roadster was originally revealed, Tesla received $250 million in reservations alone. In May 28, 2023, Elon Musk announced in a Twitter Space call that the Roadster would finally make its eagerly anticipated debut by the end of 2024. As a result, the future seems bright for Tesla and its supporters. Now, considering the Roadster's history of delays, it's imperative to lower expectations. But the Roadster could be a game changer for Tesla shares if it can be released sooner rather than later. The Roadster is more akin to the Lamborghini of the Tesla lineup than your typical sports vehicle. It stands for the premium sports vehicle market, which is an area that Tesla hasn't yet entered. An official sports car would broaden Tesla's product line and appeal to a wider market, as the company already offers trucks, SUVs, and sedans. Furthermore, introducing a new product would revitalize Tesla's clientele, particularly one as thrilling as the Roadster.